And thank you so much for being on the show. It's great to have you.
Oh, thank you so much for having me. I'm very excited.
Yeah, I wanted to, there's so much I want to dive into here today. I think this new world that we're going into with hotels reopening, travel starting to come back, we're in budget season.
Yes.
Which, I think just creates a whole other level of maybe overwhelm and anxiety for hotels right now. So we got a lot of stuff to dive into. But before we get too deep, why don't you tell everybody a little bit about yourself? What's your connection to the industry?
Yes. So I am a CPA by trade. We specialize in the hospitality industry. A little bit about me is I grew up playing competitive golf. So I actually spent a lot of growing up years, high school, college, traveling the country. And out of that really developed a love for hospitality. I mean, it's such a unique industry. And I think a lot of people don't realize, what goes into being successful in the hospitality industry. But when I went past golf and into accounting, I realized that there really is a disconnect between, CPAs and your traditional accounting model and what you need in hospitality. So like you said, you're on different calendars, you have different peaks and valleys during the year. I mean, there's just a lot there from an accounting perspective. So when I, after a few years went out on my own, I really decided to make it our model to do things differently, to really answer those questions. So if you're looking at occupancy or you're looking at, different benchmarks to measure your success as an accountant, I should know those and be able to speak to those versus just making you speak the accounting language, which may not be useful to you at all. So that's really our model, is to get to know our clients. What are the things you're looking at? How can we help you, better understand those models? Because ultimately, like you said, it all comes down to building that budget, setting those targets, and being able to evaluate, how the business is doing. And I think to get there, it has to be a collaborative approach between the accountants and, the rest of the company.
Yeah. And maybe my opinion's biased here, but in the hotel industry, it feels like there's many more moving parts. There's there's a lot of variables that you need to try to account for. No pun intended. When you're going through, you're doing a budget, or just that kind of the day-to-day, month-to-month, financial flow, the turnover, doing the P&L, you're doing your forecast, and that it's a very unique industry, I think, from the accounting perspective. Is that a fair statement to make? I
think it is, and I think a lot of times as accountants, you can try to put it into a box like other industries, and it really isn't that, because under one hotel roof, you have, 5 or 6 different operating companies, really, right? Different things that you're doing. And as the, owner or management team, you have to know all of those. So it really is just so unique in the number of transactions and things that go on within this one operation, where you really don't see that, in other industries.
Yeah. So when you don't see your financial controller for like 2.5 weeks every month,
right.
It's for a good reason.
Exactly. Not his fault.
Yeah. So you wrote a book called Never Again. Why don't you tell everybody a little bit about the book? What's happening with that? How did it come to be?
Yeah. So really the last, 18 months for us, was this, crazy time, just like our clients. I mean, we're 90% hospitality. So unlike other accountants who were, maybe a little impacted by COVID or, saw some different tax returns, I mean, we were right in it, which really speaks a lot to our model because we are monthly. So we engage with our clients to provide a deliverable weekly, if not monthly. So when COVID first started to hit at the, March 2020, we saw it, in a week, where you had a lot of accountants who aren't going to see it till next tax year. And because of that, it was a scary time for us as a company, but it was also, really deciding right away to speak to what we've always said, right? So from the very beginning, from starting the Largo Group, we've always said, we are here to help and we are flat fee. And so if you need to get on the phone with us, then we're here to get on the phone with you. And all of a sudden, we had 90% of our clients that had a failing business, right? They were closed, they were unable to operate. And it was, kind of a gut check moment for us as a team to say, okay, guys, like drop what we normally do on a Monday. let's get on the phone, right? We are going to be here for people if they need it. We're going to learn as much as we can about all the programs, whether it's your state program or PPP and all of those other things, because they don't have time to learn, right? Because they're trying to, plug the dam. And so we are just going to be this resource. And so what ended up happening is we set up, kind of a weekly check-in Zoom webinar, and we ended up getting lots of people who would call in and ask questions, and it really became a great resource to get people through those, first few months. But as we started to look back, at the end of the year, we realized, well, wait a minute, what's interesting is 95% of our clients survived, and they're actually okay. And so you started to say, well, maybe the model of being on the phone and being able to communicate, and not this billable hour approach, but the feeling we are on your team, not that that's everything, but that definitely, I think, provided a peace of mind at the time that our clients needed it. But as we move, into the next year and we're not in this crisis mode, how do we set clients up to make sure that it doesn't happen again? Right? Because that's the biggest lesson of all of this, is we never again want to be where we were, in March of 2020.
Yeah. You bring up so many great points. I mean, understanding the landscape just within the government, the different programs that are available, working with lenders on loan payments and, what to do on that side. But was there something that came out of your discussions? I know, like, asking you to sort of Monday morning quarterback the last year and a half, but was there a learning that came out of your, like, the actions that you took, where you realize, like, oh, this really doesn't work. This thing doesn't work in the hospitality industry for, your run of the mill hotel that, just, fills up on Monday and empties on Friday and gets a little bit of leisure on the weekends. Did you find something that was sort of across the board, most hotels do, that just, they got to change?
Well, I think what had happened in 2019 is everybody was so focused on the top line, right? Growth. We all want growth. We all want more. If we have 2, we want 3. If we have, 3, we want 5. I mean, that was really that was the method. And there wasn't a lot of emphasis on cash flow, right? That it was really all about this top line growth, and everything will take care of itself, and then I'll be able to sell everything and be great. But I think
that's a good point.
What we all forgot is you can have a bad month, or you can have a bad couple of weeks. And when that happens, do you have enough cash to make it? Because I think anybody sitting in March 2020, that's really the lesson, is I never again want to be sitting there saying to all of my vendors, I can't pay you because I'm closed. Or, for many of our clients, they still at least had one full payroll cycle when they got shut down, because payroll's a lag. And so you have, 100 plus employees where you're sweating it out. Am I going to be able to make this payroll? Not their fault, right? They showed up to work, but it's all about cash flow. And I think if you had been talking cash flow in 19, it would have been like, well, it's fine. I can get financing, or I can get a line of credit, or whatever it is. Or I know December is always great, so I'm not even going to worry about it. And then nobody would have thought, your business can be closed. And I think
literally a week later. Yeah.
And that's the biggest thing, is, making sure that you have a cash reserve that you're comfortable with. So, no matter what happens, I'm fine. I'm going to be okay.
Right. It's good advice. I think that there's maybe a little bit of hubris right now, thinking, we won't go back to shutdowns. Everything's going to stay open. So that was a one-time black swan event. We don't need to worry about it now. Which, probably, I mean, on the surface, it might be true. We may not be going back to a lockdown, but, like, you might not have the business coming in that you normally would have. So cash flow still is something that needs to have a lot of attention. Because while your hotel might be open, while travel may be open to your city, you might still only be getting, 25 or 30% of your normal occupancy right now. That's very, very, very common, especially as leisure starts to dry up with kids going back to school and kind of getting into the holiday season here. So, yeah, we're not out of the woods yet. From an operations perspective, I imagine that's the same on the money side.
Well, and I think it's true. I just think it's, I think it's easy to say, like you said, oh, but, we have all these, metrics and we know what October looks like and that's how October always looks like and we know what November, but, there's always going to be things we can't predict. And so I think as, business owners, it's just being disciplined when it comes to cash flow, because at the end of the day, if you have enough cash flow and you have that true cash reserve, which I think is the one conversation I would say we're having now with clients where we didn't before, is, if we're really going to run our business the way it should be, there should be a why behind how much cash we have, right? No matter what size we are. If maybe it's 2 payrolls, maybe it's 3 payrolls, maybe it's 6 months of operating expenses, whatever it is, there should be a why behind what's in my bank account. Not just like, hey, it was a great week, so this is what I have. And I think a lot of times in that 19 growth, what happened is in the effort to self-finance growth, it wasn't like people were being intentionally cavalier with money, but it's, hey, this project ran over, I'm building and I had to cut a check to whatever. And all of a sudden you're running a lot closer than you would like to run. And I think that's where it is at the beginning, because growth is great and it's great to have a new project and it's great to have a new venture and all of those things. But I would say the lesson is really taking a look at those projects before you do them and making sure we have the cash without sacrificing your existing business. Because I can tell you, we had clients who have been in business 35 years, run, $10 million operation, and they've self-financed everything. So the cash to them that's come out in 35 years has been very little, because they've just grown and they've reinvested and they've built on and they've done this, which is great because eventually they'll be able to sell and it's a fantastic business. But on March 2020, you're looking at it going, you're in your 60s and you've never taken much for yourself.
Yeah. You got to pay yourself. Right? Yeah. It's true.
Or, whatever it is, but that all comes back from that cash flow. That it's great to self-finance. Right. It's great to invest in the business, but being aware of what you're spending is so important.
Yeah. Well, right. And I think about this, and maybe we can dive into it just a little bit. So I think about it from, the line level manager, department head position in a hotel that really isn't connected to what we're talking about at all, only in that their POs get rejected because something's over budget, or, there's no money, air quote, no money to spend on this project right now, or there's no appetite for it. Can you explain to those that aren't as deeply involved in what we're talking about on a day-to-day basis, but they feel the effects of it, what are the mechanics of cash flow in a hotel? Like, what does it mean, what we're talking about?
Well, I think it's very important, just to make sure, and some of this is budgeting, right? If we have done our budget, then we're at least aware of the times where we are not, sustainable, in the sense we're not break even, right? Like we're just not bringing in enough money to cover all of our expenses. But the other piece is, really making sure that we know how much we need in, in reserves. So if okay, I'm going to go into the fall and it's sort of our shoulder season, and I know that things really aren't going to pick up again until December when it's holiday time, even if I'm, managing the restaurant, let's say, what I would want to do is be aware of what are my fixed costs, right? Because what are the costs I'm going to have to be responsible for and make sure get paid and make sure that we, are on top of, even if I have, one person sitting in my restaurant on a Friday afternoon, because I want to make sure that we are completely ready to go in December. Because what ends up happening, like you said, if a PO doesn't get, paid or gets rejected, there's these little bills that then all of a sudden pile up and we can't get an order. And all of a sudden it's this, falling down on this manager who just really didn't do anything wrong, but it's planning, right? So it's being aware of, okay, I plan that my department is going to, say lose $5,000 for the next 3 months. Well, sort of like the canary in the coal mine, we should probably say something now than assume that everyone's going to be aware of this, right?
Yeah. It's a great point. I mean, it's easy to sit in your office, your front desk manager, wherever, and just think that, there's a bottomless pit of money that you can always pull from, when really there's so much going on behind the scenes, like you're talking about. Like, you got to do a cash flow forecast, right? Going into, like, coming out of a busy summer, going into a slow fall, into a busy holiday season. And so that's a lot of the work that goes on, when you're not closing the month.
Right.
Yeah.
Well, and I think any lesson for any business owner after 2020 is just being proactive, right? To look at it and say, okay, even though these are things I can control, there's a lot I can't control. I'd rather be proactive and say it's probably realistic that I'm going to lose $15,000 in the next 3 months. But that's okay, because I'm going to make $50,000 in December, so everything's going to be fine. But just to make everybody aware, it's going to be negative 15 before we get to 50. And I think a lot of this too, like you said, is before in 19, everybody had these big staffs, everybody had every position full. So you just assumed, the wheel will keep turning. Well, now, I mean, we try to tell our clients, no matter what your size, you can't assume that, because positions have been shifted, people have moved, everybody's short-staffed. So there's such a premium on being proactive this year, I think, and going forward, to say, I'm not going to assume that everybody's looked at my budget. I'm not going to assume that everybody knows what happens here, but I'm going to own it and tell you so that we can make sure that we, move forward in the right direction.
Yeah. And so, that's actually, the timing of this conversation is really good, because again, August, September, everyone's trying to get their head around a 21 budget or 22 budget. How are you advising clients deal with this right now? Is it important to do a budget for 22, given how number one, how the historical data is just not really very useful right now? And clarity into the future is very hard to determine.
Yes. I mean, I would say, I was actually having a discussion about this with another CPA, kind of one of those friends who's a CPA. And really the one thing that, we were talking about, which is so true, is that people forget the reason that you do a budget, right? It's great to do a budget because you want to see how great things are going to be, or, it's fun when it's like, let's do 15% growth and yay, right? But there's a really important reason behind budgeting that people forget, which is internal controls. Because if you set a budget as the operator of the restaurant, let's say, ballpark what you spend in supplies, ballpark what you spend in labor. So really what you're doing is communicating some basic targets to other people who may not know your restaurant as well. And we have one client who, they had a lot of turnover, we're relatively new to them, and, they're kind of like, oh, can you do more testing? Just make sure everything looks okay. And the first thing to us is a budget, because I don't know what you should spend in supplies. But if you tell me it should be $5,000 a month, and then I see it's 10, well, now that gives me useful information. So if for no other reason, just because of the turnover that's happened and the people who are in positions that have not been there before, I feel like this is the most critical time to do a budget, because how are you going to know if, anything's gone lax or people aren't paying attention? So just control alone, setting those targets, even if it misses. And I would tell managers, because it's always scary to do a budget because you don't want to fall short. But at the same time, I think having that open dialogue and saying, yeah, we don't know, right? Like, we have no idea. And that's okay. Right. But at least let's do the exercise, because it's such a healthy exercise to do that even if we're way off, it's still worth doing it and doing it to the best of our ability.
Yeah. And I know that's always been one of the biggest gripes about budgeting in the hotel industry is that it's a moment in time. How could I possibly know what I'm going to do if I'm doing a budget in August of 21? How could I know what October of 22 is going to look like? A lot of time between now and then. But your point of establishing a line of sight towards control is there's definitely a ton of value there. But some of the best organizations that I've worked with have also gone through a monthly reforecasting. So it gives you an opportunity to be like, okay, well, yeah. So if the budget is our floor ceiling, depending on how you look at it. Where are we in comparison to what we thought we were going to do based off of more current information? And you end up in this like rolling monthly forecast, which is a lot of work, admittedly, but your visibility, I think, in your level of control over everything is far, far greater. But you just got to be like willing to go through the grind.
Yes. Well, it's so funny you say that, because actually in my book, that is one of the never again steps that I recommend, because as hard as it is, when you start to look at things as a forecast and a budget, you can get the best of both worlds. Because like you said, a forecast, it's your prediction. Everybody knows it's a prediction. Everybody knows we don't know. But then your budget follows up with, here are, based on those sales, here's the things that we could have controlled better, or we could have done better, or we ordered too much of, or all the little things that really is the point of the budget. Whereas the forecast is really more on, we're going to predict, but we know we're going to change it in 2 weeks or 3 weeks. Yeah.
Yeah. So, from a putting the budget together perspective right now, the control piece, 100% got it. That's very important. From a methodology perspective, anybody who's entrenched in it right now, is there a different way that they should be looking at putting everything together, or like based off of learnings from the last year and a half? Or is it still pretty like status quo? You still kind of go through the same steps?
Well, I think, like you said, the hardest part about budgeting this year, probably even harder than last year, although you wouldn't have thought that to be the case, is that you really are going off of 2 years of data that's not really relative. So you're really looking backwards to fall of 19, but if you're seasonal, like say you're in Florida and, the winter is your season, I mean, you're really looking at like 18 to 19 because COVID hit in March of 2020. So I think it's very hard to find, your true like baseline because it's been so long. And the other thing is, fundamentally, your cost structure in hospitality has probably changed. You're paying people a lot more now than you were. Your costs, I'm sure, are higher than they were. So I would say, as much as we love to look backward, because when you do budget, like that's what you always do, right? Look at January of last year. Well, I can't really do that. Okay, I'll look at January of the year before. Well, I can't really do that.
Can't do that.
So we'll go 3 years back, but 3 years back was a different business, probably.
Yeah.
So I think you're almost better to go a couple months back. Like even if you have seasonality, I would say start with the present, start with this year, look at July or June, depending when like you said, the travel really picked up again. And then use that as your starting point, because you can always go back to prior year and maybe see like percentage of increase. So, November is always 20% higher than October or something like that. But cost wise, I would look at this year, because otherwise it's going to be, different than what reality is. Yeah. With wages in particular are I don't want this to sound negative. They're crazy right now. But, at the same time, you have to ask, like, okay, are they just right sizing and they've always been too low? I mean, that is a valid discussion for another podcast. Which is true, but I think that's where it's so important, because I have so many clients who are like, well, what's the point of doing a budget? I don't even know what my costs are going to be 6 months from now, or I don't know, which is true. But what you really are doing with this budget is seeing if these wages are sustainable for the business. Right? Like, can we afford, I mean, I have people who are paying dishwashers $25 an hour. Like, can we do that? Can my cleaning staff make double what they were making 2 years ago? We want them to, right? I mean, you want everybody to have, a livable wage, but we also have to figure out a way to make that happen without sinking the ship. And if we don't do a budget now, we're going to get a year out and all of a sudden be bleeding, and we didn't even realize we were bleeding.
Yeah, you can't just kind of like put your thumb to the wind and see like, where is this going? Yeah, it needs to be more scientific. And that's going to allow you to figure out what other areas in your budget need to be propped up or eliminated, right? To be able to maintain this. Because at the end of the day, to your point, right at the start, it's all about cash flow. Right. So it gives you so much more visibility. I know I'm kind of, I'm sure everybody who's listening right now is like, yeah, okay, I get it. Budget, important, do it. But the point of this discussion isn't the importance of doing a budget. It's how do you approach it today when resources on property are still limited. People are run off their feet busy in some cases. There's no staff to do anything. And you got to do this super important thing, or your boss's boss is telling you got to do this super important thing, and you're just trying to survive the day. Like, there really is a method to the madness, and your contribution to it really does matter.
Well, and I think it's really hard. Like, we have one client who, and it's, rightfully so, right? All the management team is out, like, doing the work, right? Because you have no staff. And that's, it's what has to be done right now, and there's nothing that we can do about that. But I think it's reminding the management team that at the end of the day, there will be a time where you're still held accountable for this year. So It is some of that prioritizing, as much as this shift needs to be covered, or I need to be out here, and the guests are important, and all of that is 100% true. But you'd hate for things to fall short on your watch, and then you didn't do what you needed to do or catch it, which is the budgeting, because you're out doing other things. So at the end of the day, you are in this role for a reason, and so you really want to make sure that that those duties are covered too, because they are important.
Yeah, well said. We brought up in our kind of our pre-contact before doing the show here, talking about an exit strategy. And I want to dive into this just a little bit before we wrap the show, because I don't think most people start a business or buy a business or buy an investment like a hotel with the thought about how I'm going to get out of it somewhere down the road. Can you shed some light on this here? Obviously, the discussion, an exit strategy in 19 is a very different discussion from an exit strategy today. So,
yes.
19 was all about sell it over, 10 million over list or whatever. Whatever.
Exactly.
Today, different story.
Yes. No, and I think it's very important, because what has happened in the last 2 years is you may have 2 years that really don't present the value of your business, right? Beyond your control, but you may have really, had these 2 years where the tax return is going to show a crazy number. I mean, anyone who received PPP, what ends up happening on your tax return is it actually shows a deflated net income, because PPP isn't taxable, but you're allowed to take the deductions. So that can create a really unique situation where all of a sudden you have this tax return that shows these like large negative numbers when you really didn't lose money. We've had clients who argue, I wouldn't have paid my managers if I hadn't gotten PPP. Well, now I show these,
right,
hundreds of thousands of dollars as a loss. I really didn't lose the money. It just wasn't taxable. So what's really important in that is that, an exit strategy takes years. In most cases, if you are looking to sell your investment, you would have probably at least 3 years of tax returns that you would be asked to show. So what that means is we may not be able to count on 21, and we probably can't use 2020. So if you're thinking about exiting in 5 years, we really should be thinking about this going into next year. And it's really important that you're aware of, areas where you're compensated as an owner. How does it present? Do you show taxable income every year? Because, no business owner wants to pay taxes, but nobody buying your business is going to want to see a loss either, right? So we really need to make sure that we're looking at this, because you'd hate to get to the end and put it on the market or whatever it is, and then all of a sudden realize that it's very hard to show the money that you were actually making out of this investment. So I think this is really a good time to kind of walk through those things. If you were to buy your own business, what would you want to see? I mean, what should it show on the bottom line? And, real estate, do you own the real estate? Do you show that separately? Does the real estate show income? What is your rent set at? Because if you own the real estate and you run the operating company, have you adjusted rent? Because maybe rent's gone up in the last 5 years. I mean, there's lots of things to look at as you start to exit, but what happens is we get to the year we want to exit, and then it's too late, right? Because your tax return's always on a lag. So you really want to make sure that you're looking at these things now, so you have the door open, 3 to 5 years when you want to get out.
Yeah. And so a firm like yours can help with this.
Yeah, so we do a lot of planning.
Shameless plug.
Yes. But it's true. I mean, we actually have a work paper where the first thing we have you do is like fill out this exit strategy work paper as if you were presenting your business today, because it can be eye-opening because you think, well, I take X amount a month. I don't see it, right? I don't see it on your return. I don't see it on a pay stub.
Interesting.
And now if I'm a buyer, I'm not going to believe you, right? So it's very eye-opening to start and then kind of work through those things together. Okay, what could we do next year differently? And just that awareness factor is so important. And like I said, there's so much if you own the real estate, which a lot of, hotel operators do, where you can, kind of showcase both assets and really decide, do you want to maintain the real estate when you do sell? What are you selling? Because there's so much there that is on your return, but you just want to make sure that it presents itself correctly.
Yeah. But back to one of your first points, pay yourself,
right.
but
It's
pay yourself
true.
properly.
So many times you don't, and then you go to sell and you're like, no, but I took all this money out, but I don't see it.
You're like, did you? Yeah,
Right.
yeah, for sure. And this was a great conversation. I mean, we could go on about the complexities of this for a long time, but I think you've presented it in kind of a very understandable way, especially right now with the big need of getting budgets done and in this normally very crazy time of year, probably exceptionally crazy time of year for most. So appreciate you being on the show. If anybody wants to get a hold of you or learn more about what you do, where should they go?
Yes, so please check out our website, thelargogroup.com. We offer free courses all the time. We actually have one focused on cash flow starting this week. So what we do periodically, so you can just sign up and you will get our emails with our courses when they're available. But I would just tell everybody, who is struggling with budget season, take it one number at a time. It's a scary thing in any year, but it will be worthwhile. So, stick with it.
Love it. Good advice. And thanks again.
Thank you so much.